There are times in life when we feel we need money quick. Maybe you broke your phone or had to take the dog to the vet. It can be hard to juggle all of the unexpected expenses that come our way, and this is even more true for people on a low income. That's why many of us fall into the trap of getting a credit card or payday loan to make ends meet. These sorts of solutions are appealing because they can be quick and easy. However, the long-term effects of payday loans and credit cards can be significant, often resulting in bigger financial problems than we had in the first place. Payday loans are small loans that can be processed quickly. Generally, you can borrow up to $2,000 and pay it back over a year. Though these loans can't charge you interest, they will charge you a range of incredibly high fees. If you borrowed $2,000 today, let's say to go on a holiday, you would be charged with an immediate 20% establishment fee, which is $400. Then, for every month after that, you will be charged a 4% monthly fee, which for 12 months will cost you $960. So, whilst you might have $2,000 today, future you is going to have to pay back $3,360. Let's hope that was a really good holiday. Many Australians live with credit cards as a norm, and whilst they can seem helpful, it costs money to live on credit, especially for low-income earners who often have trouble keeping up with repayments. Imagine you get a credit card today for $2,000, let's say to buy a new smartphone. We'll say that this credit card charges 18% per year and that you can afford to pay off the minimum repayments, which begins at about $40 per month. Incredibly, it will take you nearly 19 years to pay off, and future you will have to pay back a whopping $5,700. No phone is worth that much money. Payday lenders and credit card companies spend a lot of money on advertising, so it makes sense that they're the first solution that we think of when we come into money trouble. But there are cheaper, safer alternatives out there. You may just not have heard about them yet. No interest loans, or NILs, are fair loans for low-income earners. They can be used for essential goods such as a new fridge or furniture, as well as for car repairs, some medical bills, and vet procedures. If you borrow $1,000 with a NILs loan today, let's say to get a new washer-dryer, you would not be charged a cent in fees or interest. You will have 12 to 18 months to pay back whatever you borrowed, and future you won't have to deal with any bigger debt repayments. You can apply for a NILs loan through the Port Phillip community group. Contact us and we'll send you the information pack. If you are not eligible for a NILs loan, then you could explore a step-up loan, which charges low interest of 5.99%. Like NILs, these can be used for certain goods and services. So if you borrowed $2,000 today using a step-up loan, let's say to get your car repaired, you would only pay back about $78 in interest for the 12 months it takes you to pay it back. So future you might need to pay a little bit more, but it's nothing compared to the fees associated with credit cards or payday loans. If you receive a CENTRELINK income, you might consider getting an advance payment. Again, there are no interest or fees charged. You pay back whatever you borrowed. Lastly, reflect on whether you actually need this particular thing right now, or whether you can afford to give yourself some more time to save for it. Instant cash can make us happy in the moment, but it will almost certainly cause more stress and anxiety for future you. Don't be tempted by quick solutions. Explore fairer and safer ways to borrow money through NILs, step-up, or CENTRELINK advances. As always, if you need help with this or anything else, PPCG is always here to assist.